Welcome to the sixth and final session of the first Step Up seminar series. And we're moving from the sell side onto the buy side, which is going to be a really nice transition to the second series, which we'll do. We'll give you more information about in a few weeks, which will start looking at sort of the portfolio manager side. For those of you who don't know me, I'm Lee Pinkowitz, professor of finance, as well as the associate director for student engagement at the Center for Financial Markets. I want to remind everybody that the recordings, right, can be found on the Center for Financial Markets and Policy webpage under events. With that, stop this. I will send this over to my partner in crime, Tom Bianco, who will introduce our speaker. Tom?
Thank you, Lee. Well, I want to welcome Tim here today. And unlike the other speakers we have to date, Tim is a new acquaintance of mine. As a matter of fact, Tim and I met at a Wall Street Alliance dinner, and I kidnapped him to speak with us. As soon as I found out that Tim was the head of research at Neuberger, I told him, and he'll tell you, probably convinced him several times that he just must speak to the group. As Lee pointed out, he's the beginning of the buy-side trend for us of speakers and professionals. And Tim has had, one of the values of hearing these professional speakers is that you see how their career progressed. And, once again, it shows how Tim is an exceptional talent, that he moved from investment banking to private equity to equity research on the buy side. And you get to see how somebody made all sorts of transitions to reach their profession. And with that, I'd like to open it up to Tim and take it away.
Great. Thank you, Tom. Thanks, everybody, for joining. So I guess just as an intro, what I'd say is this is my first time doing a class like this, and we just put together these slides this weekend. So you guys are a little bit the guinea pigs, but hopefully it'll go well. And since we're doing it via Zoom versus in person, it may be a little challenging on engagement, but I'd really encourage everybody, if you have any questions along the way, I would love to answer questions. It'll make it more interesting for you, for me, and so feel free to ask anything that comes to mind. And just as a framework for how I thought about doing this session, I think the group has had, my understanding is, a few sessions on sell-side research, like how to look for good companies, how to write about them. And I thought this session would be more about kind of what's the mentality of being a buy-side analyst. And I think not all of you, but a lot of you are in the investment club at Georgetown, whether it be undergrad or grad, and probably trying to find ideas for the Georgetown Investment Fund. So just trying to give you a sense for maybe how do you get started on something like that in terms of looking for ideas. I actually wasn't in that club when I was in school, but wish I had been. Probably would have helped me get going faster. So I'll focus this on, again, some of the basics of the buy side, but would love to take it any direction you guys want and make it as helpful as possible. So let me see if I can get this going on slide 2. Just a quick minute on the agenda. Again, I'll talk for a minute or two about the role, just to kind of understand kind of what the buy side is like. We'll talk a little bit then about how to look for ideas. I think that is one of the hardest things on the buy side. How do you compete with basically people like me, who it's a full-time job to kind of find ideas? And I think the interesting thing to think about there is there's lots of ways to compete with very experienced people, because we're all trying to figure out change and inflection, which creates, again, opportunities. And I think there's plenty of opportunity for people to find good ideas. Then I'll talk a little bit about how to formulate a pitch in terms of like how do you make a pitch to either a portfolio manager or like if you have an investment fund, how do you put together the key elements of that, like your narrative, your numbers, how are you different, and then communicate that pitch in terms of messaging your ideas. And then I'll close again. I think we'll have a few minutes hopefully to talk about tips on getting started. If you're struggling, how to think about things thematically, leveraging your curiosity to kind of find ideas. And again, some of the new tools that are out there that might be helpful if you're, again, trying to struggle through that first getting started. So that's the agenda. We'll kick it off just again a little bit on understanding the role. quick background on me. I graduated from Georgetown in '98. I was in the School of Foreign Service. I don't think I took any accounting classes except for one, business accounting and finance, which was everything wrapped into one. And I think that was helpful. But I kind of went the more traditional path of coming out of school, investment banking or consulting. A lot of people do that because it's a great training ground for understanding how to analyze companies. And worked at Merrill Lynch for a couple of years doing investment banking on the telecommunications side. Then I moved to Lehman Brothers, where I actually worked on the private equity side. So happy to talk to people about that as well, if you're interested in private equity versus public equity investing. Did that for a few years and then moved to the sell side to cover consumer companies on equity research. And so I've done that on the sell side and then came over to Neuberger in 2005. And I've been here since then for 6 or 7 years as an analyst in our research department. And then for the last 10 plus as our head of research, where I'm responsible for managing a team of analysts and also managing a number of portfolios, whether it be core portfolios or thematic portfolios that we manage within our team. So again, that's the quick background on me. Quick background on our department, just so you know how research departments on the buy side are set up. I think you probably have a pretty good familiarity with the sell side, but very similar. We're a big team, so 51 people on our team. Again, somebody covering all the different sectors and doing that globally. And doing, as you see on the bottom left, the important thing is lots of diligence, just like they do on the sell side. We do tons of company meetings, going to conferences, trying to get an edge and an insight into companies. That's really the bulk of what our department does. And in terms of profile, what does it look like? Again, our team, every place is different, but our analysts are pretty experienced. So they average about 17 years of industry experience, really people who've kind of been in the industry for a while and have expertise. And we do that because we want analysts who've seen cycles, who can kind of look for different types of names, whether it be growth, value, small cap, large cap. There's all different types of buy side investing. And you'll find some firms are very specialist. They focus on growth or value. Neuberger is a bit of a boutique where there's lots of different strategies. And so we work with all those different types of teams, but just gives you a sense for kind of how we're set up. And then similarly to a lot of buy side firms, we have dual career paths for people where people can be good analysts, can be career analysts where they can do very well. And obviously have a ton of impact on lots of different teams. And we also have analysts who kind of do great. They like being the sector analyst, but then over time, they want to broaden out and become hopefully a generalist PM. So we have analysts who then go on to join different teams here at our firm. And that's kind of a typical kind of buy side career path at lots of firms. In terms of what drives success on the buy side, again, every firm will be different, but I think you'll see a lot of similarity to these three principles, which is how we evaluate our analysts for what it's worth. The three drivers of how people are evaluated are stock picking, kind of the black and white, looking over 1 year, 3 year, and 5 year, giving your universe of companies. If you're a consumer analyst, you're responsible for say 40 companies. How do you do with your picks? You typically would recommend 5 or 6 names and weight them according to your conviction. How do you do with those names against your benchmark, which is essentially your sector? And that's, again, the beauty of the buy side is black and white. And so that's a third of how people are evaluated. Another third is your impact on PM teams, because I think the main point to understand there is on the buy side, analysts are really responsible for pitching ideas, but you really only have impact if you get those ideas into portfolios. So that's where the whole idea of how do you communicate? Are you a good communicator? It makes a big difference, because if you have great stock picks, but they're not going into portfolios, it really doesn't matter. So there's an element of really important to understand how do you communicate a pitch and get it into a portfolio to have impact. And then the last bucket is, again, more DOR, a little more judgment in terms of people's performance, because although it is a very numbers-driven business, we try and take into account sometimes when things happen for reasons that are unexpected, whether it be unexpected bad things that an analyst couldn't have foreseen, or unexpected good things that they couldn't have foreseen. What really drove the outcome, as opposed to kind of what was really driving their process. So again, just a snapshot of kind of what drives the role. And lastly, again, just a minute on what do I think about makes success in this role, because a lot of people ask that. I'd say, obviously, you have to be intellectually curious. I think the beauty of this job is every day is different. I can't imagine a more interesting job. Every day you come in and you're responding to markets, the world is changing. So it's a great job from that respect. It's also very transparent and meritocratic. Everybody knows how you're doing. The numbers are black and white. And that's all great. The big challenge is the reverse of that. It's all transparent. Market's a tough competitor to beat, and so you have to compete against yourself, against your peers in the market, which is tough. Obviously, everyone has hard work and intellectually curious, and that's important. But I would say passion is important. For those of you, sometimes I talk to people that they're interested in this industry because of, you can make a lot of money in it, but I wouldn't do it for that reason, because there's a lot of people who are supremely passionate about this business. You got to be interested in it on the nights, weekends. It's kind of like a hobby that you're doing, really. So it's just something to keep in mind. And lastly, sometimes people ask, what's the most important skill? And again, this might sound trite, but I think it is judgment and just willingness to try and think different and stand apart from a crowd, which sounds very easy, but in honesty is a lot harder to do, because it's very easy to be with everybody else. It's hard to go out there on your own and take a stand on something that's different. But that's how in this business you typically are successful. So again, just a quick overview, hopefully helpful for those of you who may be less familiar with kind of investing, what the buy-side role is all about. So I would think what's most relevant to everybody here is kind of, you're in an investment club, you're thinking, how do I contribute? How do I source investment ideas? And it's not easy, because again, you're going up against so many people competing in this business, professionals, retail people. And in the beginning, it's kind of, where do I get started? So I thought I'd give you some sense of how to think about that from if you're in college or getting your MBA. And I think, again, if I were to simplify it, and again, a lot of this presentation is simplified to kind of boil it down, I would start with thinking about this mindset of like, what you're really trying to do is look for change and inflection. And again, that's oversimplifying, because there's lots of different ways to invest. But I think when you're starting out, it's a good mentality to think about it that way. What you're trying to look for is, what if something is changing or inflecting, that's typically creating an opportunity, because nobody's really sure about what's going to happen next. There's a lot of different scenarios. It could go a lot of different ways. And if you can get a strong view of one way or another, that can have a material impact on what the outcome is going to be. So that's the kind of overwhelming framework, I'd say. You're looking for change and inflections. And what you're really trying to do is find something that most people don't see yet, but they're going to see at some point. That's the essence, I think, of the buy side. And so when you're starting, how do you start brainstorming for ideas? I'd say the simplest thing, and again, this might sound simple, but a lot of you, I'm sure, are already doing it. But there's plenty of access out there in traditional media. Obviously, reading the Wall Street Journal, Bloomberg, FT. Again, you open up that newspaper any day, and if we were here in person, I would just pull it out and I'd show you, like, almost every other article you can kind of find. There's a debate here. Where do you come out on it? And again, if you come at reading the paper and the media in that sense, it's a great way to find ideas, because again, every day there's tons of things happening, and stocks are going up, stocks are going down, companies are doing well, they're doing worse. Each one of those presents an opportunity to kind of think about an idea. And so that's obviously something I think most people are familiar with. But building on that, what are other ways to kind of, again, brainstorm for ideas? I think one of the big areas that I emphasize to everybody out there is what they call FinTwit, the Twitter world, and podcasts. There's so much good content out there relative to even 5 years ago. It's frankly amazing, and just high quality debates that are out there, whether it be by investors who were on Twitter and making their case for names, or some of the amazing podcasts that are out there where, again, great people, great investors come out and walk you through their ideas. I'd encourage you to take a look at some of those if you're struggling for how do I get started, or what's interesting. Listen to somebody articulate kind of their idea on something in detail, and it'll give you a framework for, again, how to start thinking about ideas. And then the other one I would say is friends and colleagues. Again, I would, if you're talking to people, everyone is a customer of something, an employee of something, or a competitor of somebody, or a supplier. And if you think about others in that mindset and ask them just, curious questions about what they perceive as one of those, you'll be surprised, I think, sometimes how people can give you interesting ideas to think about things that are changing and inflecting, where, again, nobody might know exactly which way it's going to go, but you're just trying to get a perspective that will give you a different view on how things might evolve. So those are just a couple of ideas for brainstorming in terms of ideas. I will tell you, again, when you're getting started, just a couple pitfalls to avoid, because, again, some people, when they start out, they start with what's just a good company, and or what's a stock that's gone down a lot, it's cheap. That's something I hear a lot from people who are starting out, and it's understandable, because I think when you're starting out, you think about what's a good company I want to own, Apple or Tesla or whatever. But again, remember, with the markets, it's all about what's priced in, because I think you have to always, again, be aware that if there's a good company out there, it's probably pretty likely a lot of others think it's a good company, and you have to understand what's priced into the expectations for that company. You really need to have a different view on things are going to be even better than what people think for that company to be interested in for more of a growth oriented company, and vice versa for a value oriented company. A lot of times I hear the pitch: the stock's down 40%, it's cheap. Well, again, everybody can see that it's cheap. You want to go to that second level of thinking, trying to think through what's going to cause that cheapness to change. Like, why will people reassess what this company should be worth going forward? So having that mindset of, again, looking to that second level beyond just the initial take is really important when you're thinking about sourcing ideas. And I'd say, again, a good framework for thinking through ideas is think about, again, when you're getting started, what's the key debate on a stock if you're looking at a name? Because in almost any company you can think of, there's always a good debate on there, and there's arguments that are actually pretty good on both sides. That's what makes markets. And I think what you're really trying to understand when you're trying to pitch a name or pitch a new buy idea is put yourself in the mindset, what's the other guy thinking when he's selling it to me? Why is he selling it to me? Like, he must think there's something, it's done, or there's no more room for upside. And I think going into that mindset, what's the key debate and what's the other side thinking of someone who's selling it to me, really gives you, I think, the ability to zone in quickly on like what's going to matter for this company and what are the debates out there for the stock. And that, in essence, I think is, again, the crux of how to start thinking about looking for ideas. You're trying to understand what is the consensus out there on a company. And by consensus, I think, again, I think most people know, but that's what is the market in aggregate kind of think is the outlook for a company in terms of maybe its earnings and its potential. And do you have a different view on that? And if you have a different view on that, then you're all set to get going on kind of writing up your pitch and getting going on a name. And again, that's not easy to do because, again, there's a lot of people out there doing analysis of companies, a lot of really smart people, and oftentimes the consensus is pretty good and it's pretty accurate. But what you're trying to do is find those times when you see everybody's thinking one thing about a company and you have a view that, there's something that's not right about that. I think there's a decent chance something else may happen. That's kind of the nuggets you're looking at when you're trying to find a new investment idea. So that's, again, a little bit of a framework for how to think about looking for ideas. And now I thought I'd spend a minute just kind of walking through what are the types of ideas that are out there, characterizing them. Again, this is a little bit simplifying things, but I think it's a good framework. If you're trying to find ideas, I think about them in kind of three big buckets. There's kind of macro-driven ideas. Which are kind of top-down. There's micro-driven ideas, which are more bottom-up, and there's kind of thematic ideas. And if you think about them, each one of them is a little bit different. So if you think about macro ideas, what you're looking at is you're looking at the world and you're thinking kind of, again, from a big picture macro perspective. Do you have a view on something more macro, whether it be energy? You think oil prices are going up or down? Interest rates, you think the Fed's going to raise rates or not? Inflation is going to ease or not? Or economic growth, we're going into recession or growth is going to pick up. These are big picture trends that are obviously difficult to get a view on. But if you get those calls right, if you have a intuitive view on that for why that's going to work, it's going to have a material impact on a number of companies, particularly certain companies like energy companies, obviously super levered to kind of what is the price of the energy going to be. Financials, very levered to what is going to be the outlook for interest rates and kind of is it going up or down. And then industrials, materials, similarly, what's the outlook for economic growth? Those sectors tend to be more influenced by those macro factors. And so if you can have a strong view on those macro factors, it's going to lead you to an idea that you can articulate for presentation. That's kind of more of, again, a top-down, more macro-driven idea. Another way of looking at for ideas is kind of what you'll often hear from companies that, or from investors, more bottom-up driven, fundamental type ideas where, and this is typically more common in sectors like consumer, technology, healthcare, business services, where the bet is something more micro. And it's typically, again, focused on more like the outlook for revenue or cost, which is leading you to an earnings estimate that is greater than what people think. So here you can think about there's a new product out and you think it's going to be bigger than what others think. Or there's a existing product out and you think that company's going to continue gaining share because whatever the reason is, versus a competitor, that's going to lead to better earnings. Or there's a new strategy in place that's going to lead to this company outperforming another company. These are all kind of more bottom-up driven ideas that are really driven by something about the business. You see the strategy playing out where it's going to play to the advantage of one company versus another. That's more of a bottom-up idea. And the last one is more of a thematic idea. And here, again, just being a little more generic, but you're looking at what are some big trends in society that are playing out that are going to create like a change or disruption relative to what's happened before. Because again, whenever you have change, that typically creates opportunity, because some people see it, some people don't. And that's the opportunity that creates interesting ideas. So a great one we've seen over the last couple of years is COVID. Obviously, COVID created an enormous opportunity for trends that emerged coming out of it. And there's a lot of questions about, how durable some of those changes are. Are they things that are going to last forever? Are we going to revert to kind of, 5 days in the office and, holding all classes like this in person or not? And all of those have, tremendous implications for so many different industries. So putting on your thematic cap and thinking about the world, what are some of the big challenges we face? Climate change, et cetera. There's just enormous number of things you can go down, and each one of them has lots of implications because, again, these are disruptive trends. For when they happen, they cause a lot of disruption down the layer of different value chains, creating opportunity. So each of these are I'd say, kind of 3 different ideas of how to look for ideas. And the key message I'd highlight to everybody is what you're really trying to do is, again, do you think different about anything around one of these themes than what you perceive the market is thinking, or what the world in general is thinking? And if you do, that's something you want to kind of, dig deeper on, because if you can see something that others don't see yet, but you think they're going to see soon enough, because if you're right, that's the essence of kind of, I think, how you want to go looking for, investment ideas that you want to do more work on and work on writing out.
Tim, can I just chime in for 1 minute? To students, these are all standalone, and whether you've been to the prior sessions or not, it's not important. But I would encourage you to go back and watch those, because, for instance, macro driven, right? Jason from Strategis came in and he talked about top down, and he actually talked macro. Tim, you'll like that. He would say macro doesn't matter until it does. Right, he's a macro firm, and so nobody's. Last night, if you came and saw Jim Van Tassel from UBS, he was talking about the bottom-up side. They were actually looking at satellite images of a factory and had engineers come in. Would this factory be up and running in time? Right, that was part of the way they were doing this. And Tim, I know you're going to cover, or we're going to talk a little bit about thematic on the side. So I just want all you guys to realize that while these are all standalone, right, it is part of a more broader. This connection. So Tim, I just wanted to kind of point that out. So please.
Yep. No, that's totally true. And again, all these worlds fit together, like macro and the buy side. You're always trying to be aware of macro, because obviously that matters. And you always want to be aware of what the sell side is saying about stocks, because that is essentially what forms the consensus. And so that's a little bit of how all this fits together. So maybe one last slide again, in terms of thinking about ideas to look for, like giving you guys maybe just some sample ideas of like, what are the types of ideas that the people will pitch on the buy side, and how do they look for those opportunities. I won't go through all these, but just to give you, again, a sense of some stock narratives that are out there that people will be looking for. Management change. You read in the paper, there's a new management coming through a company. Well, typically new managers who come in, they're going to have their own view on things. That may have implications for, are they going to reinvest a lot? Are they going to pivot the business strategically? A lot of uncertainty and change what comes in with the management change. And depending on where the manager is from, they may have a track record of doing certain things. So that's a common way of looking for ideas. You'll see in a paper, there's a big earnings profit reset at a company. They're taking down numbers dramatically because they realize they're facing some challenges. They got to reinvest in their business. That creates uncertainty. Is it going to work? Will their reinvestment be enough? Are they putting enough money back into the business or not? That creates an opportunity to think about, is that an opportunity? Normalized earnings is just about the idea of, again, when we go through times of turmoil, a lot of times things get confusing. Coming through COVID is a great example. There was a lot of businesses that were kind of not normal for an extended period of time. But can you look through and think through in a year or two out, is that business going to look more normal? And what does earnings look like in that environment? That may be significantly higher if they've been impacted significantly by something like COVID. Growth and TAM, which is just total addressable market, that's looking at names. If you have more of a growth view and you're trying to find names that are a couple of years out that you think are going to be a great opportunity, it's all about, can you model out, put the numbers to it. Why do you think that's going to be a big opportunity? How do you size the market? And again, great opportunity because nobody knows the future. And there's lots of questions around what are going to go into your assumptions for how big that market could be. how much share could one company get versus another. And if you can defend that, you can make an interesting pitch for why some growth company could be interesting. Similar, on the same side for value companies, a lot of times there's names that become value plays, they sell off a lot, but there's an opportunity if you think that that stock is cheap and there's some catalyst you see coming up that's going to drive a reevaluation of that business. And so again, just another type of approach to looking for names. The other ones, again, are more around valuation. There's conglomerates out there where there is a sum of the parts argument that you think the components of that business taken together are worth more than the company is standalone. So maybe they should break it up and sell it. There's takeout candidates, companies you think would be very attractive and will be acquired by other companies given the nature of their attractive growth profile. Activist targets, and lastly, there's a lot of companies. We spend a lot of time on more large and mid-sized companies, but as you all know, there's tons of companies out there, smaller, mid-sized companies that maybe they've IPO'd and haven't had a lot of sell-side research coverage, or they've been part of a SPAC and have lost interest from the market, or they're a spin out or spin off. There's tons of companies out there that really there's not a ton of research on, and that's only been compounded over the last 5 to 10 years as the sell side has invested less in those small mid-cap names. And so if you're looking for areas where, again, you can do a lot of deep work and you don't have as much competition from the sell side, there's tons of really interesting opportunities to look at in that area. On the right, again, just some other things that we tend to look at just to give you a feel for the types of things where analysts will look at for ideas. Short interest is in essence kind of an indicator of how many people are betting against the company, that the stock is going to go down. So when you see that at elevated levels, well, one, there's a lot of smart people betting against it, but you also know that, again, if you see an argument against that for why the stock's going to go up, it's not going to take much because there's a lot of people already betting against it. So knowing what does the market look like, what are other players wagering against you is a really important thing to be aware of. Insider buying and selling, I think, again, some of these things are easy to access, more easy to access than others, but is management team, are they buying stock or selling stock, can tell you a lot sometimes about what the direction is or outlook is for a company. Same thing is on their ownership levels. Is that going up or down over time? And again, this is getting into a little bit of the nitty gritty, but just to give you a feel for the types of things that people dig in on, what are management teams incented on? Every year, companies put out proxies, which are basically documents for their annual report, and their filings that have to lay out what is the management team going to be compensated on. And from year to year, sometimes those things change. And if you think about things never change without a reason. And so when there's change, that creates a reason to dig in. Why did they change the target from sales to earnings or to cash flow? Management teams could be pretty incented to focus on their incentives. So digging deeper into filings is one of the things that, again, I think it's hard, to be honest with you, when you're in school, because there's only so much time you can spend on this. This is more people really getting in the weeds, but it's trying to give you a feel for what are the types of things that people look for that create, again, idea opportunities. Some of these other things, again, I won't go into, but holders list. There's plenty of ways to look at. If you find an investor you think is interesting, every 45 days, every quarter, those companies have to report their holdings. So if there's a guy or girl you like investing, you can follow and see what are they investing, and get a sense, what do they own, and that might prompt sometimes a way to look for new ideas and new things to look at. I talked earlier about Twitter, et cetera. So this, again, is just meant to give you a flavor for the types of things that can be interesting from how do we look for ideas.
Hey, Tim, in terms of, if you go back up one more slide, just because James has a question and it fits nicely with investment forums and short interest. That was speaking of short interest. He wants to know what your take was on what happened to GameStop early last year. Is a short squeeze like what happened? Is it predictable? Right. I mean, obviously, in hindsight, it looked predictable, but what was your take on GameStop there?
Yeah, I mean, GameStop it's a long discussion, but I think the gist of it was like, we were in a unique period of time, I think, last year with COVID. There was so much free money and liquidity out there. The world of investing got turned upside down by some pretty interesting characters. And GameStop was an interesting example. A lot of people were betting against that, professional investors who, again, and I think anybody who has a fundamental view would say that stock is pretty overvalued. But the market is a market, and when Reddit investors that get behind something with momentum like that, and you have high short interest, that's where the understanding of trading influences really matter. Because as I think you all know, like GameStop got pushed to valuations which there's no way you can justify. They're just they're crazy. But that's sometimes the market. So I don't think that's kind of normal market type of activity. And I think last year was anything but normal in terms of what was going on in not just GameStop, but other areas of the market. But I think it does highlight the importance of understanding not just fundamentals, but some of the things that drive markets, like short interest, how are other market participants positioned, which again, it's hard to know if you're not, again, I think professionally engaged sometimes. But I think things like short interest are published easily in newspapers and on Yahoo, et cetera. So those are things you can get access to when you're doing work on a name.
Yeah, but James, also there are plenty of stocks that have very high short interest that don't see those types of short squeezes. There are plenty of them that have high short interest and go to, well, not to zero, go down a lot, because people on the short side of that tend to be sophisticated investors. Alex, we got a hand here. So Alex, thanks for raising your hand. All you, man.
Yeah, no worries. Thanks, Tim, for coming out. I guess quickly following up on the GameStop conversation, do you think the idea of small investors being able to coordinate? I mean, personally, I think that is something that is here to stay. And while GameStop was a unique situation, has the fact that retail investors suddenly having more market power, does that sway your opinion on institutional or sort of like fundamental research from your perspective, on a day-to-day basis?
It definitely, you have to be mindful of it in certain names. And again, there are certain meme stocks, et cetera, where this is more prevalent than others. But I don't think my own personal, I don't think it's a permanent change to kind of how the industry operates. I think there wasn't a dynamic last year where the stars were aligned. There's plenty of liquidity. There was the ability to kind of, the people who were shorting those stocks kind of got probably a little bit less risk aware than they should have been around the risk to that. And that created that type of exposure. Now, to be honest with you, we focus more on long only investing. We're not doing shorting stocks in terms of the role that I do. But we have to be aware of that when we're buying stocks of who owns the stock. You always want to know who owns the stock, because if you look at the top shareholders of certain names, some are more fundamental, long-term oriented type of shareholders. Sometimes you see more fast money type hedge funds, which will go in and out much quicker. And sometimes, again, you're seeing the big passive interest or not. Understanding the shareholder base is a really important part of kind of what we do on the investing side. But I think the retail movement around stocks, a la GameStop, I don't think that's going to be a permanent game changer for markets. I think it created a lot of uncertainty for a period of time, but I think it was driven a lot by the crazy liquidity we had last year.
So Tim, I know that you this whole list here, you're not necessarily saying you look at all of these or that you're following all these, but Will has a question. Says, since executives often have scheduled sales of restricted stock, do you view insider buying as a stronger signal than insider selling?
Yeah, so there's been tons of studies done on this stuff, and again, there's lots of layers of sophistication you can get on kind of what's a real signal from someone buying or selling. So in general, again, there's no simple answer, but there's a lot of detail you can get around. Is it a stronger signal or not? If people have filed 12b-5 plans, et cetera, there's all sorts of terminology of that. My point is just to be aware, investors or management teams can buy in the open market, and if someone's buying of size, that's telling you something. If they're selling of size, that's telling you something. There's plenty of stuff that happens for reasons of people, for taxes, et cetera, that you can ignore. But I found over time in my career, there's nothing like incentives and people putting their own money behind something, and nothing's a guarantee. But when you start piecing together a puzzle, hey, management incentive got reset. I think they got a new product launching, and I saw the guy buy stock, or the VP of this bought stock. That's how you put together a thesis. It's a mosaic. There's no A plus B plus C always equals D. You're trying to put together the different pieces that give you confidence that your thesis is going to play out. And it's just one more element that can contribute. So when we have an idea, we're looking at these things on page 11, but we're not always looking at all of them. I'm just trying to give you guys a sense for some of the things that kind of go into that mosaic of what are the 2 or 3 things that give you confidence that your thesis is going to play out aside from your basic assumptions. You always try and look for other things that could make me feel more comfortable with it. Hopefully that makes sense.
The group here, Tim, seems to think that there is, for the most, considerable differences between the buy side and the sell side. The biggest answer would be portfolio allocation. I think you're going to agree with that. We'll have to see whether you agree that these other things, an investment thesis and supporting analysis, whether those differ on the buy side and the sell side, and how different those really are.
Yeah, I mean, in general, I'd summarize that by being, there's a lot of similarities between the sell side and the buy side. I think almost all those things are similar, because again, we're all doing similar jobs, essentially trying to find ideas that others don't appreciate yet and that will soon be appreciated. The only difference would be that last one, kind of portfolio allocation. Sell side is just recommending ideas. The buy side is acting on those ideas, and you have to decide once you decide to act, how are you going to size it in terms of position size. So that's probably the big difference from that slide. So maybe turning from there to kind of, again, a little bit of like, okay, hopefully that's helpful in terms of how to think about looking for ideas. Now I'll talk a little bit about how do you put together a pitch with, like, narrative and numbers. And I'll try and walk through again some of the key elements that you have to have in there, hopefully without being repetitive, what you guys have heard from the sell side type presentations. But page 13 is a quick summary. You need to have a thesis summary, just the essence of like what is your thesis, what is your argument. That's obviously crucial to any pitch. And you also want to have your upside and downside. So framing kind of what do you think you're going to make and what do you think you're going to risk when you go into a name as you're putting it into a pitch. Thesis detail is just the why is this opportunity available and what's the kind of evidence that supports your thesis. And then, again, key element is the risk. Like what could go wrong and how do you size that risk of things going wrong? And then closing, again, those first four things I think you would see in any sell side note. Like what's the thesis, what's their price target, what's their downside, what's the detail, and what's the risk. That's the element of both sell side and buy side. The last part is allocation, is kind of how do you think about your conviction in a name like this? Because in some names you'll have higher conviction than others. You're going to be recommending names for portfolio. So how would you size this position relative to maybe other positions that are in the portfolio? And going into it, how do you think about the duration of this type of idea? Is this a long-term idea? Are you planning to be a shorter-term idea? Laying that out ahead of time is kind of really important when you go in, because what you don't want to have is thesis creep, where you have an idea and then it changes over time. You want to go in with knowing what are you betting on, and then how are you tracking that's actually playing out or not. That's in essence some of the key parts of having a thesis.
So Tim, if you could just, Mason has a question. I'll try and paraphrase a little bit, but he really wants to know about when, it might be more of a question for portfolio managers, but when funds weight their positions, are they using, how are you determining the net weight? Are you using quantitative measures? For those of you who are looking at the chat, by the way, the trainer measure, the Jensen alpha, you've probably all heard of. Trainer measure is basically, these are all like risk to return measures. Trainer measure is just sort of like excess risk over beta. Jensen's alpha is excess return over some measure of risk. So the question is, how do you determine this sort of allocation? Is it quant, or is it, I guess, more arbitrary is the way he says it? Do you usually plug in sell side analyst upside to determine weightings, or do you do your own? Feel free to take any or none of that.
Yeah, so a good question. I think on all those, we'll do our own estimates for kind of upside and downside because we want to frame it against our expectations. Each PM will do it differently in terms of how they think about weightings, whether it be a little more quantitative or qualitative. Some are just much more inclined quantitatively to how they do that, but others will again use more of a judgment factor. But in essence, I think what most are boiling down to is that risk reward. Like you want to have higher weightings generally where you have higher risk reward, and things are constantly changing. Prices are changing, and so as those prices are moving up and down, all your risk rewards are changing, and you want to be mindful of those positions while also being mindful of taxes and other things that might be relevant. But that's kind of the main point is, you really want to be focused on thinking about your risk reward, which will change every day because prices are changing every day. And how does that change relative to what you think your fundamental upside downside is, which again is somewhat static, but over time the world is changing. So, you might have gone in thinking my upside downside is this, but something else happens and now you got to readjust that. And that's part of the art of the buy side, is that, when do you make those adjustments, and how much do you adjust them when things are changing in the world? Because every day it's changing for better or for worse. So hopefully that gives you a little bit of color of how different PMs will look at that kind of weighting process. So, maybe just turn to page 14 for a second. Again, a little bit more on the pitch. Another way of phrasing things, because again, there's no standard, there's no right or wrong way to do a pitch. This is just, I asked a couple of our analysts to frame it how they think about it. Again, just one other way to think about it is coming in, explaining up front, what is the opportunity you see and why does it exist? Again, getting back to that point, the main point of what's the opportunity you see, and why do you think others don't see it? Because again, there's a lot of smart people competing in this business. Why do they not see it? Is there change happening? And again, a lot of times this might not seem obvious, but once you articulate it, it becomes pretty clear. Oh, I can see why people might not see that yet. So that's an important component. Upside downside, we talked about just saying, how much am I playing for? How much could I lose? This milestones to monitor your thesis is again, just another way of talking about how do you keep an eye on, if your thesis is the new product is going to do better than people expected, how do you keep an eye on that so that, again, if that's not the case, you can kind of reassess and say, okay, sometimes, in this business on the buy side, if you're right 55% of the time, you're a genius. So you got to recognize you're going to be wrong a lot. And so knowing when do I cut my losses when I have a position that I'm recommending, sometimes a lot of that comes down to making sure you don't have thesis creep. You bet on something and your thesis going in was X. If X is not working, when do you know to pull the trigger and move on to the next name? That's, again, probably a whole other session, but an important part of buy-side mentality and buy-side thinking. And then last one, again, most important when you're talking to PMs, giving them a sense for, again, a big picture. You're making this pitch, give them a sense for how are your numbers different than what others are thinking, and a sense for kind of, if you're right, what will that mean in terms of what the stock price is going to do? That's the crux of kind of, closing an argument with PMs and hammering that point home of what are we playing for? And if we get it right, how much does it matter in terms of the stock? So that's, again, a framework for do pitches. I thought I'd give you maybe just a couple of examples of again, how that translates into real world, again, having a different view on earnings or different view on valuation, coming up with a reason why you're different. So these are just, again, a couple sample examples, but Disney, obviously earlier last year launched Disney Plus. And, we had an analyst who had a very bold projection around why that's going to be way above what the street thought in terms of subscriptions. And again, Disney's a big, huge mega cap name. And how do you get an edge on something like that? Just did some math on how many people are out there that you think would buy. It's not that complicated, the math, when you get into it, of trying to make assumptions about some of these things. It's really just trying to have an insight that you think, again, people might not appreciate how big a Disney could be as a brand that's on a streaming service. That's one example. Another one, again, new product or new use case for existing product. When again, this is the slime craze fueled demand for Elmer's glue and made revenue much bigger for that. Just a couple of examples of things on the revenue side that can be much bigger than what people expect. But you can also think about the cost side. Think about on Peloton, for example. Peloton's had a big ride up, big ride down. But there's a big question right now around Peloton. They're doing a big restructuring program, laying off tons of people. Are they going to survive? And can they get to break even faster than people expected? So it doesn't always have to be about, I think a new product is going to be better, or a new market share is going to be better. It could be about, on the cost side, I think this company can right size and get to a more profitable place quicker than people think. And they can survive in a much more comfortable position than people think. Also on acquisitions, example of when Microsoft was buying Activision, what will that mean for Microsoft? That can lead to a very big difference in terms of earnings estimates that you may have versus someone else. And again, this gives you some sense of the types of things that on the earnings side can make a big difference for making a stock pitch. On valuation, that's the other area where sometimes you can have a very different view versus the consensus. And again, that may be because you think the absolute or relative value should be higher in terms of their valuation because the business is better, earnings are going to be better. It might be because you think they should have a higher private value in terms of what the business is worth to somebody else. A replacement value, what would it take to rebuild that business from scratch? Some of the parts value, what would it take to kind of take apart that business And if you sold it for pieces, what would that be worth? These are all, again, just samples of ways that you can kind of have again, at its core, all of this is about a different view on earnings or a different view on what the valuation is. And if you can, again, hang your hat on any of these, you have the beginnings of something that could be a pitch that's kind of independent. So that's again, how do you formulate a pitch? I would imagine, again, a lot of you are struggling with, okay, but how do I get started? What kind of material do I have? So I thought I'd lay out a little bit about, again, how to think about things that you can use to kind of help you get started. Once you have that idea, which again is the hardest part, coming up with an idea. But once you have that idea, how do you start doing work on a name? I'd start with, again, on the circle, think about it as kind of starting on the bottom left. I would think that Georgetown has Bloomberg's or fact sets, maybe centrally, that people can access or share that are again, that's what everybody in the business uses, and you can access that. But if not, there's stuff like Yahoo Finance and again, free services that provide most of the financial information you're going to need. As you move up, now once you get that basic market data, you're gonna want to have a sense for what is the consensus, and so access to sell side research is important. I'm not sure how much Georgetown offers that, but again, if you have an account at a Merrill Lynch or whatever, there's plenty of that's now widely available for very nominal levels. Lee, I don't know.
I was gonna chime in here. And if those of you have never used it, Mergent Online, we subscribe to InvestText by Mergent Online, well, the library does, which essentially allows you to get sell side and buy side research from a lot of those firms. You can go to the Georgetown Library website, search for it under databases, and with your net ID, guys, you can basically pull down almost any type of research that research report that Mergent covers. So, Tim, that's sort of the big one that I think Georgetown students have access to. And you are correct, we do have Bloomberg terminals.
Yeah.
Yeah.
So again, Bloomberg's and I mean, that's an incredible source of data, and obviously newspapers and Barron's. There's a ton of great content in that. That's where I would start for anyone, again, early days or thinking about investing. Start with the basics and kind of some of the business media out there. Then once you get in.
Tim, just one question. In formulating the consensus model, since students, don't have the experience to build their own models or anything they frequently reach in, the Bloomberg models aren't as good as some of the ones that are out there. Do you have any idea where there's good consensus models that they could tap into?
I don't have a great idea. I mean, there's lots of services we use, but we pay for them. I think what my honest guidance on that would be, like, I wouldn't spend too much time trying to build from scratch or get very detailed models, because again, most of what you're trying to do is find a debate or an assumption that you think is off and dig in on that. And so if you go to Bloomberg or FactSet, you can pull up what is the model, that will have the consensus sales growth estimate, EPS estimate, and oftentimes by division, what's the outlook based on what they can get from the sell side. And all you're trying to do is say, once you see that, is there a reason why you think revenue is going to be bigger than that, or earnings are going to be, bigger than that? And that's probably all you need to kind of get going. In terms of like getting access to street models, it's hard unless you're a client to get access to like the Morgan Stanley or Bernstein type analyst, and it's very hard, I think, to build them from scratch yourself. I think that's a Herculean effort, given if it's not like your full-time job. So if you get a basic model, I would focus on what is the key driver or debate that you're focused on, and focus your modeling around that. If it's Disney Plus, like for example, for Disney, the core crux of it, how many customers do you think they're going to sign up, and how much do they think they can charge? And the debate was really, they're going to get 80 million, 100 million. Is it going to be $10, or can they charge 20? And having an argument that you can defend around why you think any of those numbers will be one or the other.
That's a great answer for that. Thank you, Tim.
Tim, do you ever pay attention? You were talking about investment boards. Do you ever pay attention to like a crowdsourced site like Estimize, right, where you've got basically individuals? And for those of you who don't know, actually, I don't know if you know, I'll put it in here. You guys can basically create your own account, right, to contribute, where you have revenue forecast, you have earnings forecast, and you can see the consensus. It's not just from the buy side or the sell side, it's basically from anyone. And I know there's some academic research that looks at, the accuracy of this. Those of you who took, core finance, this goes back to the idea of wisdom of crowds. Tim was talking about that the market is smart. Well, this is if you combine everybody. And if for those of you who want to kind of have a track record where you don't really have a job, this is a place you can sort of do it, because you're not allowed to, once you put something in, you can't change it, right? So you can actually be held accountable here. So Tim, I don't know if the street looks at this ever, if you have ever looked at this.
And we looked at the service, and I think, there's some names that it's good at, some names they're not. I would encourage people to look at the Bloomberg. Bloomberg, I think, has tremendous data on consensus that it will be all you need. And I think if you start there, you'll be fine.
Thanks.
So again, just digging that. So at second level is sell side research, company websites. There's tons of information, investor presentations, et cetera. All that's available. Digging deeper, obviously trade. Once you get into trade magazines, you can start going very deep on a lot of things if you're looking to kind of get deep on an industry. But this all depends on how much time and bandwidth you have. And the last one, primary sources. Again, to the extent you have access, investor relations, management, that's things probably more professional type of investors. But again, I go back to, if you know somebody, employee, customer, competitor, supplier that deals with the company, you will always, I think, be amazed at how much information and insight you can get just by asking very simple questions about a company to someone who has one of those relationships. So again, I think it's difficult to compete in the markets, but I think there's nobody who has an edge on getting ideas, which we talked about earlier. I think there's a lot of great ways to come up with ideas. And this part about getting access to the information, it's a little bit tricky on some of the sell side stuff, but I think you have all the basics in Bloomberg, and then you can dig as much as you want on some of the company information, whether it be on company sites, trade magazines, et cetera. So that hopefully gives you a sense for kind of, again, some of the stuff that's out there for materials. I won't spend a ton of time on this slide 17, just to ensure time. But I would just say, again, when you're doing a pitch, it's always important to kind of articulate the risks. And obviously, there's tons of risks in any investment. But one thing I always emphasize, you always make yourself most credible by just taking out what are the big risks and addressing them up front and being clear about, look, here's what I see is like, we could really take this wrong, and here's why I'm comfortable with it. Rather than saying, yes, anything, all sorts of bad things can happen in the world, recession, blah, blah, blah. But you're really trying to focus on what are the risks that are kind of like reasonable to expect in a thesis, and tackling them. That really does help your credibility when you're making the case for an investment. So again, I always think it's most helpful to kind of walk through specific examples. So what I have on page 18 and 19 are just a few examples of our consumer analyst here, who put together a couple examples of, again, names he came up with, where what prompted him to come up with the idea, to give you a sense for kind of how people come up with the names. And again, they're more consumer oriented, hopefully make it a little bit more relatable. But I'll just give you a flavor for this. So Estee Lauder, I think many of you are familiar with, a very famous cosmetics brand. This is a couple of years ago. Again, they were challenged because about 25% of their sales are here in the U.S. to department stores, and that was slowing. And so there's a lot of concern about that. And you'll see this a lot in the market, where people will over focus on one issue when it becomes a concern. And what you're really trying to do is just take a step back and see the bigger picture, where in this instance, again, most investors are here in the US. There's a home bias. People really focused on this US issue. 75% of the Estee Lauder's business is outside the US. And so by just, the essence here is like just using cognitive bias that people sometimes have, over focusing on one issue, small part of the business, to take a step back, look, what are they doing elsewhere outside of the US? And then thinking through, Estee had recently bought some brands that they were going to distribute at Ulta. And if you did some simple math, you could see how big that could be relative to kind of whatever would happen in department stores. And so that just gives you a sense for, again, how sometimes there's opportunities created because people are over focusing on an issue. And if you take a step back, you can see, hey, this is missing the big picture. Similarly, for Keurig Dr. Pepper, I think many of you are familiar. This is the company that owns Dr. Pepper and Snapple and Keurig coffee cups. last year or in COVID, you might remember there was a big boom in people buying these things. And after that, people worried, oh my God, we had a big boom in that, and we're going to have a bust now because everyone's got one of these machines. A little bit again, of people over focusing on just a high level impression of like, is this just a COVID boom? When they missed two things. One, obviously, yes, the number of coffee machines being sold was going to go way down, but the number of cups sold is going to go way up, and they make much more money on the cups. That's actually where they make the bulk of their money. And again, simple math, which would tell you that was going to be a big opportunity for profits. And that was one element of the story. But the second element, and you'll see this often, again, just as you're thinking about how do I find ideas, when companies spend money on a new plant or a new CapEx project, they typically won't give you all the benefits that's going to drive because they want to leave upside in the name. And sometimes they can deliver that, sometimes they can't. But oftentimes, if a company's spending a lot, you want to try and think through what could that money be spent on? What could that do for cost in terms of bringing costs down? And Keurig had done an interesting capital project that ended up bringing costs down significantly. So you had a dual benefit of kind of profits going up from the coffee pods and also from the CapEx bringing costs down. So again, just a sample of two ideas on the consumer side.
So Tim, we got Chris has I got a hand. Chris, you want to chime in here?
Oh yeah, sure. Thank you very much, Tim. So I had a quick question. I'm at the Graduate Investment Fund, and a lot of times we're looking at kind of sell side research reports. I want to hear your thoughts on how you guys on the buy side read the sell side reports, and what you find relevant, like not necessarily maybe the price target, but how you guys view those and how maybe we should view them for our stock pitches.
Yeah. So in general, buy side, we use sell side to get a sense for what does the market expect. So we don't use it all for target prices. Like that's our job, is to kind of set target prices and kind of where we think the stock's going. But we use to get a sense of what are the expectations. So typically on any stock, there's a few analysts, and again, bigger stocks, more analysts, and they lay out detailed estimates for kind of revenue, growth, and EPS. And what you want to get a sense for is what are they assuming in their numbers to get to their revenue and EPS estimates. And that's essentially what forms the consensus, because each of those big firms is coming up with an earnings estimate that's driven by some assumptions about revenue and cost. And what we read them for is to get a sense for, like, do those revenue and cost assumptions make sense? Or is there something about them that's too conservative or too aggressive? And that's really the value of what we find in most sell side research notes, is getting a sense for what is because that's published to everybody and everybody can read that. And so that's what most people are going off of in terms of like assessing what is the consensus. And that's really the primary use case for a lot of our use cases for sell side research.
Tim, there's a question. Elliot's got a question in the chat, which is pretty interesting, which is, suppose we were thinking about like an asset or business unit divestiture that had a catalyst. It was market mispricing, but on the buy side, you're not activists, right? So would you pitch that to a PM with the expectation that an activist will come in and do that, or do you wait for the activist to come in? And if you do, is it then too late? Well, there's a market already, has it already adjusted? I don't know if you can address that.
Yeah, so a lot of times on names like that, if we have a strong view, we tend to be longer term oriented shareholders, and we're not as publicly, we do from time to time, but we're not as publicly activist on names. But there's a lot of things that happen, what's called suggestivist, kind of behind the scenes, where we meet with companies, and if we have a view, we'll express to them what we think they should do. And if they don't listen, we're also open to kind of, let others know about what we think they should do. And so there's lots of ways to have that influence on companies over time. I think, activists do a lot of the public stuff in terms of being in the media around what they're doing. But I think, these days, again, if you have an idea and you express it to management, they're very sensitive to any feedback from their shareholders around things they should be doing. So if we think there's something that's there, we don't wait for the activists to come in and make it. We go in and invest before that.
Thanks, Tim. I just want to be cognizant of your time. So we got about 10 minutes left. You've already shown us sort of 2 historical case studies. Maybe we can skip to so you talk about communication is a big part of this. Tom and I and a lot of the analysts have been telling them this. So I know you have a couple slides there, and then hopefully we can hit thematic at the very end.
Yeah. So
yeah.
I'll leave you guys. You can walk through the other examples, and again, presentations available just to give you a sense for kind of other ideas of how things might have been again missed and kind of created an opportunity. How to communicate a pitch, I said at the beginning, super important. How do you get something across? I'll keep it brief here. Most important, I think that gets underappreciated by people when they're starting out is they want to put all the information into a report and just feel like I put everything in there. But it's really important to think, less is more and being concise. Like the art of communication is really important in getting an idea across because people don't have the time, frankly, to go through and read very long reports without getting to the point. So there's a couple of slides in here about, again, sample ways to think about how to do an intro and basically what's your pitch? Go in, are you making a buy, sell, or hold? And what's driving, what's the essence of your thesis? Why now? That's the thing you want to hook somebody with is like, here's my pitch, boiler line, the 1 or 2 line about what's the crux of your argument and why is now the time to do it. Then you want to keep it to 3 points, like in the body of your thesis, if you can boil it down to 3 points, it kind of shows that you understand, essentially the argument you're making as opposed to like, hey, here's 10 things. Boil it down to what are the 3 key things, controversies, change, or development that you're kind of betting on, and lay those out in terms of kind of how you think those are going to drive the insight that you're looking for, and then go to your conclusion. Conclude with valuation. What do you think the stock's worth, upside, downside? And again, repeat your thesis. You're closing it quickly. With what are your catalysts kind of going forward. I won't go through too much of this because again, there's plenty of ways to do communication and you guys can look through kind of, this is just a sample of, again, how to do an intro, 3 points, and then conclude and kind of repeat what you said. I would just kind of harp on the point of like communication is super important. If you're communicating an idea, I've often seen that where people who communicate better have, for better or worse, have more impact than those who don't. So writing and communication skills, I think, are more important probably than they've been in a long time about how to communicate investment ideas. So let me close maybe with just, again, the question of getting started. If we come this far and you're still struggling with ideas, how do I think about them? I thought I'd take a couple ideas about, again, other ways to think through getting started looking for ideas. One way is thematically. I won't go through this slide in detail, but just to give you a sense of, at Neuberger, we look at lots of different themes. I talked about, carbon transition, autonomous driving, mega trends that are going to basically play out for a decade that are really interesting because when they happen, things change and it takes a while for people to perceive those types of changes. So one of them that we focus on is connectivity. If you look back every decade, there's a big upgrade in connectivity. You'll remember in the 80s and 90s, we had analog and digital phones. Everyone thought Motorola and Nokia would rule the world. That changed when we got to the 2000s with 3G. Data became big. Everybody thought BlackBerry was going to take over the world. Then you get to the 2010s, we have the biggest change I think all of us have seen with the smartphone and 4G. All of a sudden, super fast speed, super low latency. That opens up a whole new world for all the internet application companies and companies that never could have existed before. If you think about companies like Uber, where you couldn't, unless you had geolocation capability with 4G, that wasn't possible before we had 4G. That, again, those types of insights create, if you have that mindset, all new ideas that you can think through. As we're looking going forward from here in the 2020s, we have 5G rolling out right now, even faster, 100 times faster speed, super low latency, and more importantly, now everything's getting a chip in it. If you think about it, your connected home, your connected car, connected factories, what's referred to as the Internet of Things. If you think about how much change that creates across so many different industries and supply chains, it's enormous. So that's just a way to think through what are some of the mega trends that are happening. Because if you can think through one and then go to that second derivative of like who might benefit from that, it's a great way to think about, again, new ideas that might be out there that might be underappreciated. I mentioned earlier COVID, again, one of the best mega trends because it's still so unresolved how it's going to play out. If you think about it, we've gone through this period where everyone thought, again, the world was going to change and we were all going to have all this stuff last forever. But we've already seen this year, think about the corrections we've seen in companies like Peloton, Netflix down 40%, Zoom, DocuSign. And that's some of the ones that have corrected. There's some that have continued. Some of the software service companies, which are, again, some see as like the new way forward for how we operate. But again, these are questions that are totally up for debate. And if you have a strong view on one of those, it's a great place to start for looking for an investment idea. Same thing on again, I won't go into the sell side, but or shorting stocks, but there's lots of questions of companies that have been established, Facebook, PayPal, who are under big threat because there's lots of companies now threatening them, TikTok, fintech upstarts, et cetera. That's if you're looking for kind of more short ideas. Reopening from COVID, there's a whole question about pent up demand and what's going to happen for consumer and healthcare services. Presumably a huge demand coming, but there's also a huge shortage of supply. So you have rising wage pressures. Do you have a strong view on any of that? If you do, there's plenty of opportunities in consumer healthcare services companies where that's a huge debate that's still out there. And then again, coming out of COVID, there's mega questions about what's going to happen to healthcare, telehealth, et cetera. How will that disrupt the healthcare sector? Real estate. We're here working three days a week. Are we going back to 5? Do we need as much space? Cities, urban, residential, logistics, enormous questions that nobody has the answer to, honestly. And if you have a strong view on that and you can make a case, it's a great pitch to make for an investment club. Same thing with education. Are we going, I'll let Lee talk about it later, but there's so many questions you could argue about how education could and should change coming out of COVID. And that has important implications. And there's tons of small mid-cap stocks that play in that space. And lastly, on supply chains, there's a question of what's going to happen with, how we have to rebuild supply chains, get more local. That has tremendous opportunities for companies that are well positioned for that. Those are all just a sample of some of the debates that are out there when you're thinking thematically. Again, just hopefully helping you guys think through this. Anyone on this call can have interesting views on these that could be lead you to some investment ideas. So would encourage you to think that way. And then lastly, we just encourage everybody, sometimes people ask me, what about networks? How should I think about those? Obviously, there's the traditional networks, alumni, professor, friends, career info. There's the professional ones like LinkedIn and CFA Society, et cetera. I would just say, again, I mentioned this earlier, but the digital stuff that's out there on Twitter and podcasts, investment newsletter, it's really, really good. So if you have a passion and you're interested, I'd encourage you to go look at some of those sources for ideas because it's all free and it's, amazing content that really has only come out there in the last few years. And I'll leave you at the end here again with the last page of just some of those resources out there. Twitter, find an investor you like and follow them or a stock you like, and you can also follow that. There's some great podcasts. These are a couple of ones I love listening to. Invest Like the Best and Capital Allocators, really great, where you hear great investors talking about how they look at the world and what they're doing now or have done in the past. There's some daily stuff around Bloomberg and business breakdowns, where there's like an hour breakdown of a company. Again, these are all free services that are out there that are really interesting to look at. And lastly, on alternative data, many of you have heard about this, where there's so much more data out there in the world, more than just market data and company data. There's Glassdoor reviews, Google Trends, credit card data. Some of this is available, some of it's not. I recognize that to you, but there's more of that than you think, and there's lots of signals and opportunities to look for change and inflection in all of that data. And so it's also just a great source of someplace to start to come up with something that might be different that people might not be appreciating yet, which again is the essence of what the Buyside is really all about.
This was a really great, I think, recap and closing for our first Step Up seminar series, and hopefully will be a really good lead-in to what Tom and I are working on for hopefully in like 6 weeks, 4 or 6 weeks. We will let you guys know when we get that squared away. Tim, just fantastic. Really appreciate it. Tom, I want to thank you for all the work you've put into this seminar series. I don't think people realize how much you have. And I'm going to give you the last word.
So, Tim, I just want to thank you again. That was exactly what we had hoped in terms of the messages you put across. And if you look at the chat right now, you'll see that the students are all thanking you. And some of them saying they learned more in this last hour and change than they have in much of their career here. So thank you again. That was really terrific and really appreciate it. And